You're about an hour into the US session, and markets are still riding that post-Fed glow, but the tone just got more complicated. I'm Grant Mercer. This is Storm Stock Solutions, and let's bring some clarity to the chaos in today's tape. The freshest headline hitting traders right now is from MarketWatch's Jeffrey Bartash. Two Federal Reserve officials who dissented from the latest interest rate cut are out saying, in their words, inflation remains too high. Chicago Fed President Austin Goolsbee is arguing the Fed could have waited for more data on inflation and employment. That's important because it reminds the market this isn't a one-way street to easy money. As those comments circulate, people are reassessing how many cuts are really in play for 2026 and beyond. And you can see rate-sensitive corners of the market turning a bit more cautious. Overlay that with another thread from earlier in the day. Christine Idzelis at MarketWatch points out that stocks just notched fresh record highs on the back of this week's Fed meeting, but the optimism may be missing some economic challenges under the surface. So you've got this push-pull. Price action that says soft landing, full speed ahead, and Fed and macro voices quietly saying, not so fast. The tension is what's steering the tone into the next leg of the session. On the strength side, AI is still the lightning rod. Joseph Adinolfi highlights that Time's 2025 Person of the Year choice has some traders joking, and some not so joking, about a magazine cover curse on the AI rally. But underneath that chatter, AI-related names and themes are still where a lot of risk-on money is parked. According to Jamie Chisholm's reporting, even Jeff Bezos and Elon Musk are pushing the AI story off-planet, talking about AI in space and the infrastructure that would support orbital AI. That keeps semis cloud and space-adjacent hardware and communications on traders' radar as areas of ongoing strength. Now, the same stories powering the upside are also where the fragility lies. If markets have overread the Fed as more dovish than it really is, or if those dissenting voices gain traction, the high flyers tied to AI and growth could be the first to feel it. That's why professionals are watching for any shift in language from policymakers or in inflation expectations, because leadership can turn to a liability if the macro narrative snaps back. Beyond tech, there are some under-the-radar movers to keep in the background. In retail, Lululemon is in focus after a tumultuous year culminated with the ousting of its CEO. Claudia Sees reports that activist founder Chip Wilson is actually praising the move. For traders, that kind of governance shakeup can mean a period of volatility as the market handicaps whether a new leadership team can reignite growth or whether it signals deeper issues. And in healthcare, Jamie Lee reports that the Senate just failed to advance stopgap plans tied to expiring Affordable Care Act subsidies, raising the risk of higher healthcare costs broadly. That doesn't translate into an instant chart pattern, but it is the kind of policy backdrop that can influence sentiment around insurers, hospital operators, and managed care if higher out-of-pocket costs start showing up in the data or political policy rhetoric into 2026. Looking ahead to the next hour or two, I'll be watching three things. First, how the market digests those Fed dissent comments. Do yields back up, and does that cool off the most rate-sensitive growth names? Second, whether AI leaders keep shrugging off the jinx talk and hold their relative strength. And third, whether any follow-on headlines around tariffs, chips, or healthcare policy add to this slow undercurrent of macro uncertainty beneath the surface of record highs. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady. Waddle!